Welcome back, everybody, to the deep dive. Looks like we've got some Bitcoin and Ethereum on the menu today.
Yeah, always exciting.
You bet.
Yeah.
You sent over a couple articles from Cointelegraph, both kind of focused on like what happened in January and then what people are predicting for February.
Oh, very interesting.
So let's jump into these and see if we can make some sense of it all.
Sounds good.
One of the things that jumped out at me right away is just that Bitcoin had a heck of a January.
It really did.
Not just like a daily spike or two over $100,000, but like the whole month it closed above $100,000, which,
That's a big deal.
yeah, it is a big deal. So what makes that like a monthly close different than just, hitting that number in a given day?
Well, I think you can kind of think of it like a long distance runner. They finally hit their personal best. And it's not just a burst of speed. It's like they sustain that for a really long time.
Oh, I see.
And, your articles even mention like Cointelegraph Markets Pro and TradingView data. They confirm it wasn't just some fluke. It was like a real accomplishment. So yeah, Bitcoin is definitely showing some serious stamina there.
So Bitcoin strong, but then your articles also mention that little like end of January kind of like,
Oh yeah, little wobble.
yeah, everybody got a little bit spooked.
Mm-hmm.
Um, especially when former President Trump was out there talking about tariffs.
Absolutely.
It wasn't just crypto. It seemed like everybody got kind of nervous.
Whenever there's that risk-off sentiment, it kind of ripples through everything.
Yeah.
I thought it was interesting how your articles use the fear and greed index to really show this because,
Yeah.
it basically just measures like how optimistic or anxious investors are feeling.
Right.
And when those tariffs got announced, that index took a dip.
Oh, so people are getting nervous.
Yeah, it shows that uncertainty of, really creeping in.
But then here's where I thought it got really interesting. Your articles give you two totally different analyst perspectives on like what to do with that information. Markets dip. What do you do?
Right.
Axel Kibar, he seemed pretty chill.
Yeah.
Saying corrections are normal. We haven't seen like crazy hype, so maybe we're not even at a peak yet.
I think his view is that these little wobbles are healthy,
Okay.
It shakes out the the weaker hands, so to speak, and it creates a more sustainable foundation.
Oh, okay. So like a little bit of a correction could actually be a good thing long term.
Right.
But then you've got Michael van de Poppe, who's actually suggesting that tariffs could actually boost crypto in the long run.
Yeah, I thought that was interesting too.
Now that seems counterintuitive. Like, how does that work?
Well, his argument is that events like this can actually push people towards alternative assets.
Oh, okay.
So if traditional markets are looking a little shaky,
Oh, so like a flight to safety almost.
exactly, hedge against that instability, and for some people that's Bitcoin.
Okay, so two very different takes on the same event, and then you throw in Plan B's stock-to-flow model, which I always get a little...
Yeah, that one's a bit of a head scratcher.
It is. It is. I mean, it's like, are we trying to predict tides here or what? Because, like, he's basing this on Bitcoin scarcity, which,
Right.
makes sense. Like gold, it's limited
Right.
supply drives value, but it just seems so...
It's controversial.
Yeah, controversial is a good word for it.
But he's got a lot of followers, that's for sure.
Oh, yeah.
And that little red dot that he recently added to his chart has definitely gotten people talking.
That little red dot basically meaning that we're in, like, the most intense phase of this Bitcoin price cycle.
Potentially.
Oh, boy.
Could be exciting, could be scary. We'll see what happens.
Right, we'll see. Okay, so January was a roller coaster. What about February?
Well, historically, February's been good to Bitcoin.
Oh, really?
Yeah.
Like,
Yeah.
what do we typically see?
Well, CoinGlass data shows an average 14.4% gain in February.
Wow, that's significant.
It is, it is.
That's like a nice Valentine's Day present right there.
That's right. Especially if you held on through those January jitters.
Right, and you know what else makes this February interesting? It's a post-halving year,
Oh, that's right.
which, as your articles point out, has historically been even better for Bitcoin.
Even better, yeah.
So, like, what kind of numbers are we talking here?
Well, in 2013, we saw a 61% gain in February. Then in 2017, it was 23%. And in 2021, 36%.
Oh,
Past performance isn't a guarantee of future results.
of course not. Of course not.
But still pretty eye-catching, right?
Yeah, no kidding. So Bitcoin is basking in the spotlight, but one of your articles pointed out that Ethereum's actually been having kind of a rough time lately.
Yeah, it's been in a bit of a downtrend.
Fell below $4,000 back in December. It's still kind of hovering around $3,260 right now. What's going on there?
Well, the article quotes Aurelie Barther, an analyst at Nansen, and she basically says that Ethereum needs to step up its game if it wants to get back to those previous highs.
Okay, in what way?
Well, she points to things like needing more activity on the blockchain, more like new and compelling uses for it, more collaboration with
Oh, I
institutions.
see.
It's kind of like any technology, right? It has to keep evolving and proving its value. It can't just rest on its laurels.
And it's got competition now, right?
Exactly.
All these other layer one blockchains popping up.
So it's not just about price, it's about Ethereum's whole position in the blockchain ecosystem.
Right. So what can we look for in February that might give Ethereum like that much needed boost? What are the potential catalysts?
Well, there are a few things that could really shake things up.
Okay.
For example, the regulatory climate in the US seems to be warming up to blockchain
Oh,
technology.
interesting.
And, this could lead to some interesting partnerships, new use cases for Ethereum.
I was especially interested in that little tidbit about Elon Musk's Department of Government Efficiency, maybe using blockchain for expense tracking.
I saw that too.
Like imagine if they went with Ethereum.
Yeah, can you imagine?
Talk about buzz.
Right.
I mean, that would boost adoption for sure.
Of course, it's still early days. There's no guarantee,
Mhm.
but it's definitely something to watch.
For sure, for sure. And then there's that whole like rumor fueled by Ethereum co-founder Joseph Lubin that the Trump family might be getting into like Ethereum-based cryptocurrency businesses.
Oh, yeah, that's juicy.
Now, if that happens, talk about headlines.
It would be huge. Visibility, credibility, potentially attract a whole new wave of investors.
So we've got potential government adoption whispers of Trump family involvement, increased collaboration. Like these are some pretty significant what ifs for Ethereum.
They are, they are. And let's not forget about the recent activity in the Ether options market.
Okay, options trading. That's where it always gets a little complicated for me.
Well, I think the main takeaway there is that the recent surge in Ether options trading volume suggests that the market might be recovering from that dip.
So even though the price has been struggling, there are some signs that sentiment might be shifting.
Exactly. And specifically, we're seeing something called a bullish skew towards what are called out-of-the-money call options.
Okay, break that down for me. What does that actually mean in plain English?
So essentially, it means traders are betting that Ether's price is going to go up above a certain level. They're buying these options contracts as a way to basically leverage their bets on a potential price rebound.
Oh,
So there's some optimism brewing, even if it hasn't fully translated into a price surge yet.
got it, got it. But then your articles also point out those pesky resistance levels that Ether needs to break through.
Ah, yes. Those resistance levels, they're like hurdles on a track. And right now, Ether is facing a pretty big one at $3,400.
So what happens if it manages to clear that hurdle?
Well, if Ether breaks through $3,400, it could trigger a cascade of what are called leveraged short liquidations, and we're talking over $1.09 billion worth.
Hold on. Leverage short liquidations. That sounds pretty intense. Can you just unpack that for me a little?
Sure. So imagine a group of traders who borrowed money to bet against Ether. They're expecting its price to go down.
So they're essentially betting on it to fail.
Right, they're hoping to profit from its decline, but
Yeah.
if the price goes up, instead they could be forced to buy back Ether to cover their losses, and that buying can actually push the price even higher.
Oh, I see.
It's like a chain reaction that can amplify price movements, especially when you have a lot of these leveraged short positions in play.
So breaking through that resistance level could create like a domino effect,
Yeah.
potentially sending Ether's price soaring.
That's the idea now. Whether or not that actually happens is anyone's guess, but it's definitely a scenario to watch out for.
Okay, so a lot of potential energy building up around Ethereum.
Lots of potential.
All right, let's take a breath and just recap what we've covered so far. Bitcoin made history with that first ever monthly close above $100,000. But then we had that little dip at the end of January, triggered by former President Trump's tariff announcements. And we looked at two completely different analysts' perspectives on what that might mean for Bitcoin going forward.
Yeah, it's fascinating how different people interpret the same events.
It is. Then we shifted gears to February, which historically has been pretty good to Bitcoin, especially in these post-halving years. And we saw some pretty impressive gains in previous cycles. But it remains to be seen if that pattern will hold true this time around.
Right, history doesn't always repeat itself.
Exactly. And then we turned our attention to Ethereum, which has been facing some challenges lately.
Definitely some headwinds there.
Like that competition from those other layer one blockchains, the need for stronger activity on the blockchain, and of course those persistent high gas fees.
Those fees are definitely a pain point.
Yeah, no kidding. But despite those challenges, there are also some exciting potential catalysts on the horizon. Increased government interest, that possibility of the Trump family getting involved, those bullish signals in the options market.
And let's not forget the potential for those leveraged short liquidations.
Right. If Ether manages to break through that $3,400 resistance level.
It could be a wild ride.
So both Bitcoin and Ethereum have their own sets of opportunities and challenges heading into February. Looks like it's going to be a pretty dynamic month.
Absolutely. And we've only just scratched the surface.
Yeah, there's a lot more to uncover.
There are so many other factors that could come into play, but at least this gives us a good starting point
For sure.
for understanding, those key trends, those potential scenarios.
Definitely. And in the next part of our deep dive, we're going to explore some of those broader factors that could shape the crypto landscape in February and beyond. So stay tuned for that.
It's going to be interesting to see how it all plays out. Welcome back to our deep dive into Bitcoin and Ethereum.
Feels like we're standing at a crossroads here. Will Bitcoin keep riding this wave, or will Ethereum make a comeback? But your articles make it clear that there's these bigger forces at play too that we can't ignore.
Oh, absolutely. You can't just look at Bitcoin and Ethereum in isolation.
Right.
You got to consider the whole global macroeconomic landscape.
Okay, so paint me a picture. What's the economic forecast looking like right now?
Well, we've got inflation concerns, potential interest rate hikes, and even geopolitical tensions, brewing in different parts of the world.
Yeah.
All of these can create uncertainty and volatility in markets.
Right, and that's even outside of crypto.
Exactly.
That's the thing that always kind of gets me with these conversations is how much what's happening in the quote-unquote real world affects crypto.
Oh, absolutely.
No.
Remember that market dip we talked about triggered by former President Trump's tariff announcements?
Yeah, everybody got a little jumpy.
Exactly. That's a prime example of how events in the real world can really ripple through the crypto space.
Okay, so keep one eye on the global economic news. Got it. What else?
Regulation, another huge one.
Of course.
Governments around the world are still trying to figure out how to approach cryptocurrencies.
Right.
Some are embracing them, some are cracking down, and that level of clarity and consistency in those regulations, it's going to have a big impact on investor confidence.
It's funny reading your articles. It's almost like crypto is this rebellious teenager trying to find its place in the world while the adults try to figure out what the rules are.
I love that analogy.
Yeah.
And just like with teenagers, there are going to be some growing pains.
For sure. For sure. Do you remember what happened when China announced its crackdown on crypto mining and trading?
Oh, yeah.
The market went into a tailspin?
Exactly. That's how powerful regulatory uncertainty can be.
Yeah.
Huge swings in the crypto market. But then on the flip side, we've also seen how positive regulatory developments, like when the U.S. approved a Bitcoin ETF, that can spark rallies too.
So it's a double-edged sword.
It is. It is. So keeping an eye on those regulatory news is going to be crucial for navigating February and beyond.
Okay, so macroeconomics regulation, we got those on our radar. Anything else?
Technological advancements are always key drivers in this space.
Oh, of course.
Things are evolving at an incredible pace. So keep an eye on developments in areas like Layer 2 scaling solutions, decentralized finance, DeFi, and the metaverse.
You know what? I have to admit, sometimes I feel like I can barely keep up with the lingo,
I know, right?
let alone the actual innovations happening. But it does sound like those advancements could really fuel a lot of excitement,
Oh, absolutely.
potentially bring in new users and investors.
Definitely. And then there's the psychological factor, which is harder to measure, but equally important.
Oh, yeah, sentiment.
Sentiment, speculation, fear, greed, FOMO.
All those emotions.
Exactly. They can send prices soaring or plummeting in an instant.
You can look at charts all day long,
Right.
but at the end of the day, it's people making decisions.
It's human nature.
And those decisions are driven by psychology as much as logic, sometimes more.
Yeah, sometimes more.
Okay, so we've got the global economy, government policies, tech advancements, and even the mood of the market. No wonder crypto is considered so volatile.
It's a wild ride, but that's also what makes it so fascinating.
Okay, so with all these factors swirling around, how can we even begin to predict what's going to happen next?
Well, we can't predict the future with absolute certainty, but by understanding those historical patterns, the current market dynamics, and those potential catalysts that we've been discussing, we can start to develop some informed perspectives.
Okay, so no crystal ball, but we can at least use our knowledge and our critical thinking skills to try to make sense of it.
Exactly.
But I have to ask, at the end of the day, a lot of people just want to know, will Bitcoin and Ethereum go up or down in February?
Right.
I mean, what are the chances of those historical patterns actually repeating themselves?
Well, it's tempting to look at past performance and just assume that history will repeat itself.
Sure.
But the crypto market is constantly evolving. There are new players, new technologies, new challenges emerging all the time, so you can't just rely on the past. You got to factor in the current context.
So don't get too caught up in those past performance numbers. They're just one piece of the puzzle.
Exactly.
Okay.
It's like trying to predict the weather for a specific day just by looking at what happened on that same date last year.
Hmm.
You also need to consider the current conditions, like temperature, wind speed, humidity. It's the same with crypto. You got to look at the full picture.
I like that analogy.
Hmm.
So besides those broader economic and regulatory factors, are there any specific things that might suggest that Bitcoin and Ethereum could deviate from their typical February performance this time around?
Well, for Bitcoin, one potential headwind is the upcoming U.S. tax season.
Oh, right, taxes.
Can't escape them even in the crypto world.
We got that right.
Some investors might sell off some of their Bitcoin holdings to cover their tax liabilities, and that could create some downward pressure on the price.
Okay, so tax season's something to watch.
Hmm?
What about Ethereum? Any unique challenges it might face in February?
One ongoing challenge for Ethereum is those high gas fees,
Yeah, those fees can be a real pain for users.
especially when compared to some of the newer blockchains that are popping up.
Right.
And while there are solutions in the works, things like Layer 2 scaling solutions, they're still under development, so it remains to be seen how quickly and effectively they can be implemented.
So if those high fees persist, it could make it harder for Ethereum to compete.
Yeah, even if it has other things going for it.
So it's all about striking that balance between innovation and practicality.
Exactly.
Okay, so both Bitcoin and Ethereum have their own unique set of challenges and opportunities to navigate in February. It's shaping up to be a pretty dynamic month.
Absolutely. And remember, we've only just begun to explore the many factors that could influence their performance.
Right.
The crypto market is constantly evolving, so stay informed, adapt to changing conditions, and of course, never invest more than you can afford to lose.
Words to live by. Okay, in the final part of our deep dive, we'll try to put all this information together, explore some potential scenarios for Bitcoin and Ethereum in February, and we'll leave you with some key takeaways and a final thought to ponder as you continue your crypto journey.
We'll see if we can make some sense of this fascinating and ever-changing world of crypto.
Okay, so we've looked at all these big forces that could shape Bitcoin and Ethereum's February.
Right.
Now let's try to bring it all together and game out some scenarios.
Yeah, it's time to make some educated guesses.
Right, right. So let's start with Bitcoin.
Yeah.
One scenario is that history repeats itself and we see that classic February surge. What would that look like?
Well, if Bitcoin follows its historical average gain of 14.4% for February, we could see it climb to around $117,000.
Okay.
And remember, this is a post-halving year, which has historically been even more bullish for Bitcoin in February.
Right.
So yeah, breaking that six-figure mark again is definitely not out of the question.
So a Valentine's Day surge for Bitcoin? Love it. But what could throw a wrench in those plans? What are the chances of that actually happening?
Well, that upcoming U.S. tax season could be a factor, you know?
Oh, wow.
If investors sell off some Bitcoin to cover their tax bills, that could create some downward pressure.
Yeah, Uncle Sam always wants his cut.
He does, he does. What else could dampen Bitcoin's momentum? Well, we got to think about those macroeconomic wildcards. If inflation keeps climbing and the Fed hikes interest rates aggressively, that can make investors a little skittish about riskier assets.
Including crypto.
Including crypto, exactly.
So basically, if the global economy starts to wobble, Bitcoin could take a hit.
That's a possibility.
Okay, so those are the downsides.
Yeah.
What about the upside? What could push Bitcoin even higher?
Well, continued institutional adoption is huge,
Oh, yeah.
We're seeing more and more established players, companies, investment funds, even governments getting into crypto. And that growing acceptance and legitimacy, that could really drive demand for Bitcoin even higher.
Makes sense. So the more mainstream Bitcoin becomes, the more valuable it could get.
Yeah, potentially. And let's not forget about the scarcity factor. Bitcoin supply is capped at 21 million coins.
Right.
As more people buy and hold, that remaining supply shrinks, and basic economics tells us that could push the price up.
Okay, so Bitcoin's got this tug of war between the bulls and the bears.
Yeah.
All right. Let's talk about Ethereum. What are the potential scenarios there?
Well, one possibility is that Ether continues to struggle, unable to break through that $3,400 resistance level.
Oh.
If that happens, we could see it trading sideways or even declining a bit in the short term.
So more choppy waters. Not exactly the comeback story I think some people were hoping for. But what about the flip side? Is there anything that could happen that would propel Ether forward?
Oh, there's always a chance. Remember those potential catalysts we talked about?
Right.
Increased government adoption, the Trump family rumors,
Oh, yeah, those were juicy.
the growing interest in DeFi and the metaverse. Any of these could spark a surge in demand for Ether.
It's like those hidden cards in a game, right? You
Yeah.
never know what might get flipped over and change everything. But let's be realistic here. What are the hurdles Ethereum has to overcome to really thrive?
Well, those high gas fees are a major one.
Oh, yeah.
Until Ethereum finds a way to scale its network and make transactions more affordable, it's going to have a tough time competing with some of these newer, faster blockchains.
Right. And there's always the regulatory uncertainty, too.
Absolutely. And you never know when some negative news might pop up and spook investors.
So Ethereum has its work cut out for it. But hey, maybe those challenges will just fuel even greater innovation.
You never know.
All right, we've covered a lot of ground here. What are some key takeaways that you want our listeners to keep in mind as they navigate this crazy world of crypto?
Well, I think the most important thing is to remember that the crypto market is incredibly dynamic and unpredictable.
Okay.
Don't get caught up in the hype or the daily price swings. Focus on understanding the fundamentals, the long-term trends, the potential catalysts that could shape the future of these technologies.
So zoom out, see the forest for the trees.
Exactly. And never stop learning. Stay informed about those things we've talked about. Macroeconomic events, regulatory developments, technological advancements, market sentiment. The more you know, the better equipped you'll be to make good decisions.
Knowledge is power. Great advice. Anything else you want to add?
Yeah, don't let fear or greed drive your decisions.
Okay.
Develop a solid investment strategy, manage your risks carefully, never invest more than you can afford to lose, and most importantly, try to enjoy the ride.
Ooh, that's good advice.
Crypto is full of exciting possibilities, but it's also a roller coaster.
Buckle up.
Oh.
All right, folks, that's a wrap on our Bitcoin and Ethereum deep dive. We hope you found it helpful and maybe even a little bit entertaining.
We had fun.
We did. Now, we want to leave you with a final thought, something to ponder as you continue your crypto journey. What role do you believe Bitcoin and Ethereum will play in the future of finance, technology, and even society as a whole? It's a big question, but we think it's one worth asking. Until next time, happy investing.